The Nigerian Employers Consultative Association, NECA, backed the decision of the Central Bank of Nigeria, that's the Monetary Policy Committee, to sustain a tight monetary policy stance, describing it as a necessary step to consolidate recent economic gains and ensure long-term stability. On the other hand, Lagos Chamber of Commerce and Industry restates its position that the benchmark interest rate at 27.5% remains a depressing burden on businesses. NECA's view was made by its Director General, Mr. Adewale Smart Oyerinde, in a statement titled NECA applauds monetary policy's decision to sustain tight monetary policy rates, calling for strategic consolidation towards sustainable growth. Mr. Oyerinde recalled that during the July 2025 MPC meeting, committee retained the monetary policy rate at 27.5%, while also keeping the cash reserve ratio and liquidity ratio unchanged. The move, according to NECA, aligns with the prevailing economic conditions and signals the central bank's commitment to maintaining macroeconomic discipline. Mr. Oyerinde described the decision as a critical and timely intervention aimed at safeguarding Nigeria's modest progress in reducing inflation, stabilizing the naira, and attracting investors' confidence. Mr. Adewale Smart Oyerinde, Director General of the Nigerian Employers Consultative Association, NECA, is my guest. It's going to affect businesses, particularly borrowing?
Well, for every economic decision you have to make, for every policy as the MPR or whatever policy you have to make, you have contending options, and then you have to take a very critical step of balancing the act to ensure short-term sustainability, and also not only ensure short-term sustainability, but also ensure your long-term growth. So whatever step you take at any particular point in time will be influenced by what exactly you want to achieve. And we think the CBN's recent activities and economic trust of actually balancing those different variables came to context of the decision that it has taken. While we acknowledge, absolutely the issues concerning the cost of funds, which will economic growth to a certain extent, I think we rather look at it from a broader perspective of what exactly this will achieve on the long run. Will it curb inflation? Will it encourage saving and potentially attract foreign direct investment and also protect local investors? While there are serious concern, and we really appreciate that, about leading to increase in cost of borrowing. But I said you have to create a balance in the context of all these different variables and look at what action will give you the maximum of the effect that you want. And those not normally we guide your position. But the concerns that was raised by MAN, concerns that was raised by LCCI, are they valid? Very, very valid. Are they very important concerns? Very important concerns. But we rather look at it from a broader economic perspective of the need to balance the whole variables and then see what you achieve within the context of the medium and long term. Have we experienced some level of stability at the macroeconomic space? Absolutely, we have. But has it really trickled down to the microeconomy? Those are concerns that we'll continue to express, and we hope strongly that the CBN is listening and we do the needful in reversing the pattern.
Structural reforms is what you're also talking about. Can we get that clearly specifics? What are those structural reforms you think needs to be undertaken? And also addressing the fallout. That's talking about the concerns of the likes of LCCI and MAN. How soon do you think that we might start to have a loosening of policies by the MPC, considering the fact that inflation has also started to a little bit reduce gradually?
The reduction in inflation, as you mentioned, I think it's you don't want to take the action that will if you're not very sure that the ongoing interventions is the one actually leading to the reduction in inflation, you want to be a bit sure, you want to be cautious in your intervention, cautious in your in being too adventurous within the context of how well or how far you reduce the tightening of the monetary policy. I think these are probably part of the things that are running around the mind of the leadership of the CBN. But for us, I said, there is that need to control inflation. There is absolute need to control inflation. Is there need to promote economic growth? There is absolute need to promote economic growth. But we also believe strongly that within the context of the structural reforms that is ongoing, I think there also need for a deepened stakeholder engagement so that all these concerns, all these challenges, they will be put in proper context before the next MPR, before the next meeting of the CBN leadership on these very important issues. But for us, I think we need a bit of stability to actually gauge what exactly are the reasons for so many things that are happening. The Naira has stabilized at 1,500 and something for a while. What are the real reasons? Are they a result of the definitive interventions by the CBN? Are they definitive intervention by the fiscal authorities? So you need to be sure that this action is what is triggering these results, this outcome. So that gives you or puts you in a stronger position to play with your figures or to come up with those figures that we currently see. But for what I said, balancing the act is quite important now, and I think that's what the CBN is trying to do.
Well, now another big one during the week, just like I also discussed earlier, is the rebased figures from the NBS. Of course, the private sector definitely have been waiting so much, just like everyone has been waiting for those figures. How did it come to you? What do you make of some of the sector's performance in that report?
Well, it affirms a bit of the reality that we have canvassed for a while, that the manufacturing sector continues to be challenged, and that shows within the context of its contribution. It also shows the rise of the service sector, that it's not all about oil and oil now. It's not all about the rigs now. There are other sectors that are leading the charge within the context of national development. And what this will show for us, or will show the leadership of the country, is that there is also need to give some definitive attention to certain sectors that have a bigger potential to champion the growth that we are actually looking at. And because that's also shown the challenges that we face from the manufacturing realm, that should also be a pointer to the kind of definitive and urgent intervention that we need to provide for the manufacturing sector, which we should do even as at yesterday. Our options are limited. If you want to remain very competitive, want to remain very relevant, and want to be to maximize the opportunities inherent in the African Continental Free Trade Agreement, we don't have option than to make the manufacturing sector work within the context of our economy. But rebasing, a good direction to go, but all these policies, all these reforms must do something and must do it quickly, must affect the economic position or economic reality of an average Nigerian, and must address it very quickly.
Addressing that is also important. I also raised that with Mr. Agbaje earlier in the studio. And I'd like you to, when we talk about addressing the fallout of the vulnerable ones, it's something that is very important in Jermaine. What do we do? Are there quick wins for government? Because some will say social safety net, distributing money, doing all of this is not the way to go. What are those things that government could do that will definitely trickle down?
You know, it's a chain reaction. You know, once you start the wheel, it moves round and round and round. And the wheel for us is this: whether you're talking of job creation, You need to get as many Nigerians back to productive employment. You need the private sector to do that. The $1 trillion economy that we aspire to have, you need the private sector to do it. So one of the easiest way to do is provide definitively now, provide or improve or deepen the creation of a conducive operating environment for SMEs, for MSMEs, and organized business as a whole. Now, once you ramp up production, it has its consequential effects in the Nigerians as a whole. You reduce progressively the cost of doing business. As you progressively reduce the cost of doing business, the value of goods and services, the quantum of the price of goods and services also progressively continue to drop. The average Nigerian's income will be able to buy much more for him and his family. And the more he buys, the easier for the business also to sell, because the business makes more money, plus back the money into production, plus back the money into expansion. You are addressing the issue of unemployment. As you continue to address the issue of unemployment, you're also addressing the issue of insecurity. So it's not rocket science. Let's do more in addressing the critical issues that organized businesses are currently facing. Issue of regulation, issue of cost of power, cost of energy, the current rate of forex. Yeah, it's stabilized, but it's not uhuru yet. To deal with those environmental issues that affects businesses, that makes cost of doing business very high. Once you address it, you progressively be bringing down the cost of goods and services. And as I said, the average Nigerian will have much more within the context of his pocket to buy more goods, which makes life much more easier or much more pleasant to live. We just have to deal with the issue of the environment, business environment, as it were. We don't have option. We just have to deal with that.
And for the private sector, what would be the major challenge if we were to identify some of them at this time? I know part of what you said is also what they are going through, stability in the foreign exchange market, figures coming from, of course, MBS and all of that. But wrapping this up, what do you make of those challenges, one, and also the handshake between now the fiscal and the monetary? We see the monetary side trying to tighten up by the day. From the fiscal side, we've sorted out the issues around taxation. I think they've been gazetted now. They've been passed into law. Implementation should start in 2026. But putting all of this side by side, are we going to achieve that sort of inclusive growth that we expect as a country?
Is it possible? I'll say yes. Tolu, I'll say absolutely it's possible. For the issues that the private sector is currently facing, deal with the issue of regulation for the private sector. Regulation is not a problem for the private sector. We appreciate regulation. We understand the importance of regulation. We know what regulation can do within the context of creating a favorable environment for businesses. But we need to address the issue of regulators. Regulators that are becoming undertakers for organized businesses. We need to address the issue of regulation. Secondly, we need to address the issue of cost of power, cost of energy. This band A, band B, band C thing, it doesn't seem to work. Even those in band A are not getting the fair deal that they were promised. So we need to address the issue of power. It's very central to doing business. Then we need to address the issue of forex, which is also a big issue for organized businesses. Forex and everything surrounding it. The forex forward issue of that was carried over from the last administration is still pending, and many businesses are still struggling and suffering from that unresolved issue. So those are three critical issues that we think these issues the government can assist the organized private sector to resolve. The second part you mentioned is the issue of the handshake between the monetary and fiscal authorities, which is quite commendable.
Yes.
We've not had it like this for a while. We've always complained about the contradictions and or the inherent contradictions in the action of the fiscal and monetary authorities. But the handshake is commendable, is welcome, but the handshake must also work for the benefits of organized businesses and Nigerians as a whole. So, irrespective of the handshake, whatever the coloration of it, the handshake should not be an end on itself. It must lead to definitive outcomes, and one of those definitive outcomes is make doing business easier, make an average Nigerian business more competitive, and then make the average Nigerians feel the impact of the economic reforms. I think those will be quick wins that the government can achieve.
Well, interesting one, but in 1 minute, the outlook still looks very, well, let me say bright. Many say it looks like there'll be light at the end of the tunnel. Not there will be, but it looks like there will be light at the end of the tunnel. Can we wrap up with that? Do you think so?
Yeah, we think so. If government will do the needful, do the things that it needs to do. I said there's a bit of stability at the macroeconomic level.
True.
But we must see that improvement at the micro. Ordinarily, the micro should lead to the macro stability. But now we've seen a level of stability at the macro level. And that's effect, that positive effect, we have to feel it at the micro level, and with sustained engagement with key stakeholders. I think a lot can still be achieved. Yeah, the government is listening, but we believe more can still be done within the context of stakeholder engagement.
Mr. Adewale Smartorinde is the Director General of the Nigerian Employers Consultative Association, NECA. Thank you so very much for giving us your views around this very important topic of discourse and, of course, developments around the world of business. Have a great week.
Thank you for having us.